there's a downturn and valuations are down in venture. It's harder for startups to raise capital. And I was just wondering if you could, all of you, perhaps quickly address how you're thinking about funding and talking to companies in this latest environment. Michelle, maybe you could kick it off.
Sure. Thank you for having me, and to the fellow panelists. This should be a great session. I'll answer it in two ways. One is just how we're thinking about it as investors, but then also how we're thinking about it as partners to companies. So in terms of investors, there's a double-edged sword to every time. In the boom times, everyone complains everything's too expensive, and then a downturn, everyone's all sad. So the advantage that Sequoia has, having invested through 50 years of market cycles, is that we're no stranger to these periods. I think one of the best things about it is that it draws out some of the best founders who are in this for really genuine reasons. They have a technology they want to build, they have a problem they want to solve. They're not just looking for a quick buck. And so we've had great meetings with wonderful founders, especially at the early stages, that we're very excited about. And then in terms of how we're helping our companies think about it, every company is different. So we work with companies from seed all the way through $100 billion public companies. And so there's no one size fits all answer for that. But what we are telling companies is to embrace reality, recognize that the environment has changed, the cost of capital has changed. And as my partner Ravi Gupta, who is CEO and CFO of Instacart, likes to say, it's not your fault, but it is your problem. So you have to plan for that reality and adjust accordingly. And it's something that you need to think about this week and this month. And so we're telling founders, you need to make it your top priority, and that will look different. There are some companies that actually are going to probably increase their spending because they're seeing a loosening talent market, and they may be able to get talent that would have been very hard for them to get previously. And there are others that need to pull back in areas, especially, we see a lot in sales and marketing. So I think the last message we have for founders, embrace reality plan is don't waste a good crisis. And it's not a crisis for every company, but take advantage of these periods to extend your advantage and keep the foot on the gas in R&D and really come out even stronger. A lot of companies that took advantage of these times, whether it's PayPal or DoorDash or others, built advantages during these periods where it was harder to fundraise that led to their extreme competitive advantage today. And so what we're most excited about is seeing the founders and the companies take advantage of this period and just adjusting to the new reality and coming out even stronger.
Okay, good answer. And Aydin, what about you?
Yeah, I mean, just to add to that, I think Michelle covered it really well. We as a firm have a strategy to basically back the world's greatest, iconic, enduring companies, regardless of stage and regardless of regardless of formal fundraising context. And I feel like in times of uncertainty and when there is a crisis, there is great opportunity to be able to engineer things that were not possible. So I think as an investor, wearing my investor hat, it's a really exciting time for people like us who have prepared mind. And I think the innovation doesn't stop. In fact, it's accelerating. And it's also a really great time because of the uncertainty and some adjustments that the larger companies are making. There's actually greater opportunity to catch talent and also build market share position. I think as the founders, what I tell them, listen, like you're the driver, you're at the helm of your company. As the driver, the first thing you do is don't run out of electricity or don't run out of fuel. Like people forget that. We're going to be the world's $1 trillion company. I'm like, yes, I hope you get there. But the number one thing is don't run out of gas, don't run out of electricity. So we've always been the most conservative voice on the boards and the founders that we partner with. So we tell them, listen, it's all about like being able to have enough time so you can weather the storm. And if you can, then great things can happen. So that's kind of been our advice to them. The last thing I will add is I feel like we have kind of gone through one of the longest bull periods for like 10, 12 years. And I think in those times, it's very difficult or more difficult to identify what companies are truly excellent because everybody's getting up rounds. Sarah's having a field day, $1 billion round after $1 billion. Now, like we can actually really see what companies are truly enduring and which companies are truly efficient and have the ability to weather the storm and actually thrive in the storm. So I feel like it's kind of, even though it's challenging, it's also one of the most exciting times to be both an investor as well as a founder.
Erin, how are you thinking about it? I know you focus a lot on mobility and autonomous driving and so on. Is your approach any different?
Yeah, certainly. I think adding to both those great answers, being a corporate venture fund, we always are looking to balance both that strategic and financial. We always say, it can be a great strategic tie-in, but if they aren't solving the right problem, or we don't put in that financial due diligence, likely they're not going to be around to deliver on some of those strategic learnings and the strategic bets that we're trying to make. So we continue to look at balancing both. As a company in mobility, maybe people don't always go there with Goodyear, but our purpose is to enable mobility, very broad term. We do that today, but we're also looking at what is that new transportation in the future? What does that ecosystem look like? And there's a lot of problems to solve in transportation today. And I think I will be talking about this a lot. I think solving the right problems that are big enough to matter is going to build great companies in the long term. And even in this environment, there's an opportunity also to look at who's solving those problems that are even going to be more impactful in a recession, for example. Who's driving more efficiency in transportation? Who's helping alleviate maybe some of the driver shortages in transportation, for example. So with that in mind, we continue to invest in autonomy, which we'll touch on a bit later, continue to invest in who is going to enable the infrastructure that's required for EVs. So yes, today maybe market valuations are looking one way, but there's also this long-term view that there are big problems to solve. And that's a big part of what Goodyear is trying to do by investing, but also supporting our startups of being successful.
And Sandhya, what are you thinking about the environment right now?
So not much to add based on these great answers, but as the founder of our firm, Vinod likes to say, for startups, you have to survive long enough to get lucky. And what's really exciting about this environment to me is we can do what I think all of us like to do, which is partner with companies that are trying to solve really hard problems. We have always been big investors in deep tech, in science, and this is the time to not just build financially competent, enduring companies, but really transformational companies. You have a little bit more time to really understand not just current problems, but what is the change in demand, in behavior that you can sort of play on? In previous downturns, it wasn't just those who were the financially strongest survived, but those who looked at things a little bit differently, right? Whether it's Airbnb and Uber, who were always cited coming out of 2008 and 2009, but also some of our portfolio companies like DoorDash and Instacart that found something different in what people wanted and took the time to experiment and partner with the right long-term investors and build something really transformational, not just large and enduring.
Okay, so thinking about founders that can create something enduring, you hear so much about how in tough times, that's when the really good founders come to the fore. So I'm wondering, is it really there's something about the tough times that shapes them, or is it more that the founders who are really ambitious are the only ones who dare to start companies during this time? What do you think it is?
So I think that there are great founders that start companies at any time and all times. Obviously, when we quote some of these great companies, they are often the exception. But I do think you need to have a special kind of perseverance, a dedication to really building something strong and different. So I do think the founders look very similar to great founders of any period, but I think there's a culling of sort of noise and of others that could compete with mind share or even funding. And I think it's very much similar traits to what makes any great founder build a great company.
One thing to add, there was a really great story that I've seen once, which somebody was saying, oh, I want to be just like Elon Musk, and his wife responded as like, do you really think that you have what it takes? And I think somebody mentioned an example that there was one time where Tesla literally had 48 hours of cash left. and he still literally ran the company as if it like had 2 years of cash left. So I think the interesting is now is a really great time to see. We have this thing at Felicis that we call missionary CEOs and mercenary CEOs. These are the times when we find out who's truly missionary and who's there for the long term and is like, who's gonna like get up even after falling multiple times. We heard like it might not be our fault, but it is our problem and we need to manage it. So I think from that perspective, it's really important. I think the second thing is we also have a different thinking and strategy is that we only invest in markets that are critical. So we are always like reacting to markets, but the reality is the markets go up and down. That doesn't necessarily mean that that is the true intrinsic value of the companies we're talking about. So that's why we love doing things like that are payments, like core to infrastructure. Every company in business has to process payments, or we have companies that do education, like where, wow, one company is like college equivalency is literally for 100 million Americans, the only chance they will have a real promotion that is meaningful in their lives. Or cancer screening or solving cancer. We have a third-gen cancer company called Zillis. So when I think about these things, whether there is recession or not, whether there is inflation or not, unfortunately, people are not stopping to get cancer. We're getting sick. Curing is really important. We have a life. We all want to have a better life and take care of our families. So if a company offers you the opportunity like to have college equivalency so you can get a promotion, maybe not for people in this room, but for 100 million Americans, it's really important. So, and then like even today, like there was news that one of our companies, Flexport, just closed, like one of the highest ranking Amazon executives as CEO. I don't know if that would have happened if there was no crisis. I think it's a really interesting opportunity, and I think this is the times when people can make bold moves, and I think, again, it stands out even more in an environment like that. For most people that have not made up their minds, are uncertain and hesitant, now is time for the bold to make moves and show what they're made of.
Sorry, to your point, I think critical as well as solving really hard problems. If you solve something that's hard, the incremental value that people will get is so large that it doesn't really matter what the market conditions are, but that often takes time.
Okay. And I think to add to the big problems to solve, and I think what we look at, especially across our portfolio, but as we see deal flow, is just having that focus on the purpose and focus on what you're trying to deliver. There's so many times you see companies that they come in, they're like, we do it all. Okay, well, in this time, what is that one thing that you're going to do really well, that one problem you're going to solve that's going to matter for your customer, for your consumer, and those are the things we're kind of constantly looking at, not only for our external investing, but also for our internal startup teams.
So Aydin, you were saying that maybe there was a change at the top at one of your portfolio companies in part because people are rethinking everything, and this was at Flexport because of this downturn?
I mean, it was a speculative answer, which is some of these moves, like if times are really, really great and the stocks are flying off the shelves, I'm not sure if people would make risky moves.
Okay.
But what is really interesting is when you're at a company, this is not Amazon, but I've seen it like other portfolio companies were able to nab executives from very well-known companies, and those executives are like, let's say at these well-known companies, suddenly you see your stock like take a 70, 80% hit. Now all of a sudden you're thinking, okay, so all my upside is gone, and here's like a fresh new company with a fresh new vision. I think you're much more motivated to do that versus like when you see the stock go up like 40% year after year, I'm not really sure you're gonna go like make a risky step necessarily. Right. So all I'm saying is, again, it's challenging times. I don't want to trivialize it. It's probably very tough for quite a large number of people, but also for the bold, right? Like there is now a really great time to step out and truly like stand out. And that's why I'm like missionary versus mercenary. Mercenary people are taking advantage of like really great times, but when times are really tough, that's when I think you see missionary founders, but also like missionary people that can be part of great companies say, you know what, I'm gonna step out and I'm gonna do this thing. There is no better time like this to go ahead and do it.
Michelle, what's your best prediction for, if you have a crystal ball, which everybody thinks VCs do to some extent? Like what
I lost mine. I can't find, no. Yeah, best prediction for this year?
No, for long term, like let's say next 5 years, or this year.
Oh, next 5 years. Well, I spent a lot of time in crypto, and so I think the next 2 years in particular are going to be very interesting in crypto. I think there are a lot of people treating this new macro environment as a typical crypto winter, and I think it's different for a number of reasons. Bitcoin was invented in 2008 in the last great financial crisis, and so actually crypto has mostly only existed in a basically zero interest rate environment for a long time. And it's been through a lot of its own cycles, but it's never been through a global macro shift in the way that we're seeing today. And it's also never had quite as many users, as many dollars, and as much regulator attention. And so I think the next couple years will be really important. I think you're seeing a lot of activity come out of the Senate in terms of regulation, obviously the SEC and CFTC, and I think we'll get, hopefully, a smart regulatory framework that will actually allow the space to be much safer and more beneficial and grow exponentially going forward. So we're excited about that framework, and a lot of the founders that we work with would love that clarity and know where to build. And so that's an area where we're quite hopeful that this downturn will weed out some of the less missionary projects in crypto, and will establish a framework that can help crypto grow from hundreds of million users to billion internet scale in the next 10 years.
Okay, because there are some people in crypto who don't want that, right? And it sounds like there will be a winnowing, and the companies that are for regulation and feel that it can help them grow will be benefiting from this, right? And then just to be clear. Okay.
I think there's always a nuance. There are certainly people, right, taking advantage of the lack of clarity, and that's less recommended. There are others who would really like to have clarity and are building something that they see as fundamentally useful to the world. And so I think those founders will benefit and will be very excited to have that clarity take place.
Okay, so crypto's coming back. It's despite the ups and downs in the market this year, long term, you're still super bullish on crypto.
Yeah, as a firm, we're very optimistic on the technology and hopeful that this winter will actually be an important one.
Okay, great. And Sandhya, what would your best prediction be for?
For the next few years, I'll take a stab with technology as well. Language. That sounds really simple, but for 75 years, people have been researching how to build AI models that actually can understand human language. Language is the cornerstone of human intelligence. If you crack language, you crack AI. And we are on the cusp, literally, in the last 3 years, with breakthroughs that have happened in transformers and self-supervised learning, we are on the cusp of cracking AI. What does that mean? It actually means that machines and software will finally serve us versus we serving the needs of software. When you use software, you have to figure out how to use it. You subscribe to the frameworks that the machines have sort of mandated. Now, we use natural language. We can code with natural language. We'll be able to build applications. We'll be able to do design. We'll be able to query data. So my prediction is in 5 years, language, natural language, the way we're talking right now, will be the way we interact with most software and machines.
Great. Do you have a...
You're looking skeptical. Well, I'm a dreamer.
No. I'm all for it. It's just, I feel like we've heard that for a long time. But if it actually happens, is there a company in your portfolio?
So I'm a data-oriented person. It has to do with actual breakthroughs, not just dreaming. And if you look at, and if anyone's interested, we can go through literally in the last 3 or 4 years, the concrete technologies that are now available, making these things possible. And we have skeptics even internally at our firm who say, oh, wow, this works now. So we have a number of companies in our portfolio. We're a big partner with OpenAI. We're the only outside investor in OpenAI that's the builder of some of these large language models and diffusion models. It's here.
Okay.
And again, it's not they control us, right? Like the science fiction movies. The whole point is software and machines are now really serving us in the way we want to work and interact.
Okay.
I can back up Sandhya on this one. I don't know if anyone's played with GitHub Copilot, but it uses one of the NLP, the natural language processing models, to allow a Copilot for coding
From
that
OpenAI.
anticipate what you're trying to get out and kind of autocomplete in code. And it's a really cool example of the technology taking place. So yeah, I think there are a number of companies. You know, Lilt has made great advances in translation using more of the NLP work that's come out of Google. Obviously, Snowflake as part of that is kind of the data warehouse engine making all that possible. So we're seeing more and more. Pilot, a company I work with, is doing this for accounting. I think we'll actually really are seeing this start to be really useful and not just be a buzzword. So I will back you up on that, Sandhya.
Thank you. I appreciate it.
And I'd like to add, it's almost like we're at the same company because we actually do have a company. It's interesting, like a lot of VCs are very technology centric and thinking about software. And I'm thinking, well, there are 6 trillion people in the world, and what would be interesting in that those people can communicate better with the technology.
Yes.
So one of our companies that went public, Sandhya, with the exception of Google and Amazon with Alexa and Google, like it's the only other company that understands human language and can translate it into actions, and is being deployed in cars and consumer goods. So I'm really excited for it because I feel like for a technology to be truly meaningful, it has to be able to touch every human in the world, in the planet, and not just programmers. So I'm kind of happy that we have that, but I also have a different prediction where 20 years ago when I was at Google, I think the first wave of like green investment started happening. I think it was too early, then a second wave, and we as a firm at Felicis think that we are now at the third wave that we called Earth 3. And while many of the technologists and investors are focused on Web 3, we feel like the combination of innovations in energy and climate as Earth 3 will be much bigger and more impactful than what is happening at Web 3, and will be bigger. And I think people are now realizing, due to the crisis, energy independence is not optional. Like, given like war or like natural crises, like we really need to figure out a more sustainable way. It is now getting factored into law and regulation. So now is the perfect time to invest in it. And the beautiful thing is, like, whenever we are most skeptical, actually we forget that humanity is brilliant, and that's our brilliance really comes to play when we're in our biggest crises. So I'm seeing things like micro nuclear reactors and trees that are engineered to capture double the carbon, and it's one of the most exciting times. So we as a firm are very excited and happy to see more innovation and be much more actively involved and invest in this space.
Trees, I was just going to follow up on the trees. Is that actually something that's...
It's real. It's happening right now.
So
there are
trees that can absorb double the carbon are being planted.
not only double the carbon, but their bark is also more resilient to fire. So what basically we have realized is by genetically engineering trees, you can make them more resilient to natural shocks, but they grow twice as fast and their leaves are twice as big, so they can capture twice as much carbon. And you literally plant them on lands that are literally like, there are people that own like millions of acres of land. So if you plant these trees, first of all, the land becomes more valuable, but you can make a lot of money from carbon credits and do good in the world.
Where can we see one? Is there one in...
Living Carbon is the company, so you can check it out.
All right. Erin.
I think to add on that theme, and maybe people don't always think about this, but as a tire company, I mean, sustainability is a key pillar to our strategies now and in the future. You know, we have the goal of having 100% sustainable tire, which means, pulling materials not from the oil industry necessarily, but what are the alternative sources that we can pull from. We're very excited that we were able to demonstrate a 70% sustainable tire last year as a proof of concept. We're saying, hey, if you can make one, then that's the first step on that journey. So we're doing things, for example, we actually use a lot of soybean oil in our tires, which is not necessarily going into the food stream today, but can be used in industrial products. So you see that in some of our products today, as well as investing, not from a venture standpoint, but as a company standpoint, in making rubber from dandelions, of all things. So what are, if you think about where we're getting materials, maybe from a barrel of oil today, how do you start to replace those with other either reusable or things we can grow and regenerate, so we can continue to sorry for the pun, but a lot of vehicles today rolling forward on these tires in a more sustainable way. And I did not plan that joke. I apologize for
That's amazing, though.
But the poor taste, and but that's a big piece. And I think the second prediction, because we heard about it a bit this morning, is, and we keep hearing about when are autonomous vehicles going to happen. And I think the important thing that I'm seeing in the market is not necessarily the autonomous vehicles everywhere, but how do we start to match the technology and what it can do with the proper use cases so we can make those routes safer, more sustainable, more efficient today. So that's what we're seeing in our portfolio companies. We invested in a sidewalk delivery company called Starship Robotics, to a middle mile company called Gatik. Gatik, for example, just announced yesterday they're going to be doing driverless runs with Sam's Club, and they've already been doing that in Arkansas because
so there are driverless trucks on the road now.
Yes.
In Arkansas.
Okay. In several locations, and I think it's matching the use case. It's a simpler route. It's a route they do every day, from distribution center to store or distribution center to a pickup area. So how do you match the technology with the problem to solve today, and then continue to solve the harder problems over time? So a couple things that we're looking forward to and excited about.
Great. And Sandhya, you had a kind of counter-intuitive prediction that you were telling me about in the green room.
Oh, just a very slightly contrarian view on the gloom and doom. There will be a huge recession, and I'm putting my own money behind this, so let's see how it goes. Most of the data on inflation actually suggests that most of the dislocation is short-term, not long-term, and pretty temporal, obviously excluding any other exogenous issues like another war or something like that. And so I think it's going to be a slowdown in growth for sure, but I don't think there's actually going to be this huge recession. And echoing what everyone here on the panel has basically said, so this is the time for the strong to get stronger. And strong doesn't just mean large tech company, it means the startups in our portfolios that have been financially disciplined, that are solving hard problems. Go get that sort of looser talent. Spend maybe a little bit more actually on marketing and branding, even though that sounds counterintuitive. There's less noise. Become the thought leader in your space and actually move into that position of strength. This is just my prediction.